Let's move on now from telecommunications to the steel industry, because the results, one of the sets of results that came out from the JSE today was that of Arcelormittal South Africa. In the Power Lunch studio in Johannesburg is Nonkululeko Nyembezi-Heita, who's the CEO of Arcelormittal South Africa. And Ku, thanks very much for joining us this lunchtime. Let's have a look at the headlines that really screamed out at us. A headline loss of 518 million rand for the year ended 31st of December, compared to a headline loss of 52 million in the previous financial year. EBITDA decreased by 35% year on year. It's been a tough year, hasn't it?
It's been horrific, Lindsay, and if we thought that 2010 was the beginning of a turn in our industry, 2012 certainly made it clear that that wasn't the case. But in looking at our results, you actually have to disaggregate two sides of the business. While steel struggled, actually our commercial coke business struggled even further on the back of a decline in demand from the ferrochrome sector in South Africa. So you saw both of those come together in a very negative way to have a major impact on our results.
Yeah, of course that demand scenario isn't looking too good at this stage of the game. I mean, we've seen a drop in domestic steel sales, a decline in commercial coke sales, as you say, liquid steel production down 7%, and that despite capacity utilization sitting at 66%. I mean, that's very telling of the demand scenario locally. How concerned are you, sitting with capacity just over 2 times what's necessary to cater to that demand?
Well, this is why we embarked on the asset optimization plan, which saw us to take out of our production capacity 1.5 million tons last year. We closed down electric arc furnaces in October. There were several reasons for that. One was an environmental issue. Another one was electricity cost inputs, making that uncompetitive. But the third one is this issue of making certain that the footprint that we run has been sized in accordance with demand. So I think you'll see that right across the world, not only in South Africa. Europe is certainly leading in this respect, and Arcelormittal as a company, as a group, leading in making certain that we start to moderate capacity so that we can function at higher utilization levels.
Mm-hmm.
And Ku, as you answered my first question, or rather my first point, in such candid fashion, I'm going to ask you a question now, which I hope you will answer in a similar fashion. Let's play the blame game if we can now. The results have been disappointing. You said it's been an horrific year. Let's get 3 factors here. Number one, the South African economy and the South African regulatory environment and Eskom, for example. That's point number one. Number two, the world economy and demand for steel falling off and starting to stabilise now, but 2012 wasn't particularly good. And number three, the internal policies of ArcelorMittal itself. Were they nimble enough? Were you nimble enough to adapt to the conditions? So is it 1, 2 or 3 that we should be blaming?
Well, I think 1 and 2 for sure, given that the biggest cost driver, or the biggest results drivers rather, are steel prices, which by and large are out of our control. We price on the global pricing curve. And secondly, the prices of key raw material inputs, which again are out of our hands. The demand-supply conditions in the steel industry still places the industry globally in a net oversupply position. So you'll see the industry struggle until we can structurally change that dynamic so that demand and supply are more in balance. The issues that are internal to ArcelorMittal South Africa is that we are in a net overcapacity for the South African market. Particularly our Vanderbijl Park plant was always designed not only to fulfill domestic requirements, but to also fulfill demands outside of our borders. And when the market is down and you're not making money in your domestic market, you'll make even less money in your export market. So the taking out of capacity actually is in stark recognition of the fact that actually it becomes much, much more difficult to export. And essentially, we have stopped exporting from Vanderbijl Park. Logistics has partly to do with that, because from an inland plant to the coast is another $50, $55 per ton. You simply don't have the latitude to absorb those costs anymore.
Yeah, is that lean status set to become a lot more permanent? Because if you're looking at some of the commentary that was released this morning, glaring is that on a compounded basis, steel demand in South Africa has grown at an annual average rate of only 1.1% over a 20-year period.
A startling number, isn't it? And so in essence, our market is the same size as it was 10 years ago, 2004 more or less, and where you do see the fly up, it's because there is a big infrastructure program going on. So we had a fly up in the period between 2006 and 2008 for the Soccer World Cup build. You will see that pattern continue to do so. So I think to the previous question, what we have to do is to make sure that we can run at elevated capacity utilization levels at a normal market. Mm-hmm. And how you cope with the peaks becomes a matter of management, essentially. So by coming out of export markets and also shrinking the capacity, in essence, we are playing to exactly the market that we have, because essentially steel is a domestic business. Mm-hmm.
And Ku, you're talking about break even in the next quarter, and that's encouraging, I suppose. The market doesn't think it's that encouraging with a 1.5% fall, but that's just a moment in time. And I suppose that with the global economy picking up, notably the top three, United States of America, China, and Japan, suddenly with the prospects of that economy starting to grow at last, is this optimism justified, do you think?
We respond far more to apparent steel consumption, and that has to do with the stock levels in the industry. So in the 2012 financial year, particularly in the second half of the year, what happens is that the traders further downstream of us all went to much, much lower stocks than they would normally keep. So everybody went to 6 to 8 weeks. Typically in our market, 8 to 10 weeks is normal. So our forecast actually is predicated on stock replenishment in the first quarter. We have not yet placed any confidence in a rebound of underlying demand. That is sure to come when it comes, but for the time being, we are not forecasting that for the first quarter outlook statement.
Yeah. A little earlier you highlighted some of the pressure points on the business, and that from the input cost side of things. I mean, you've got to be feeling the electricity tariffs increases in a big way, and I'm sure negative about the kind of increases Eskom's looking at putting on the table moving forward. On the iron ore price side of things and the dispute with Kumba Iron Ore, you've been at loggerheads since 2010. What's the status with regards to what's happening there?
Well, there is a court case in front of the Supreme Court in the latter part of this month, which will listen to the appeal by the Department of Mineral Resources together with ICT against the judgment handed down in December 2011. Hopefully after that we can then draw a line and we're done with the court process, so it just proves that everything does come to an end. Once that decision is handed down, then the arbitration proceedings can ensue, and that's to determine the validity of the supply agreement. And so all these processes hopefully will get into full speed during the course of this year. Mm-hmm. So by the time we get into 2014, hopefully they're out of our lives. Clearly the arbitration being the one that has got a slightly longer period still to run. The court case should be a lot shorter.